Welcome to section 3. In this section, you're going to learn how to use single candlestick patterns to identify potential market reversals. There are 4 basic single Japanese candlestick patterns. The first 2 are called the hanging man and the hammer, and they look like this. The hanging man and hammer look exactly the same but have different meanings. Both have little bodies, long lower shadows, and short or absent upper shadows. The difference is where you see these on different trends. So a hanging man you're going to look for at the top of a trend that's trending up. This could be an indicator that the market will start heading down the other way. When price is rising, the formation of a hanging man indicates that sellers are beginning to outnumber buyers. The long shadow shows that sellers push prices lower during the session. Buyers were still able to push the price back up, but only near the point where it opened. So this should basically set off an alarm telling us that there are no buyers left to provide the necessary momentum to keep raising the price. So here are these you can look for when you're trying to look for a hanging man at the top of an uptrend. Like I said, it has a long lower shadow, which is about 2 or 3 times the length of the body. There's little or no upper shadow. The real body, or the body once it closes, is at the upper end of the trading range. And then just remember that the color of the body is not important. So then the hammer is a bullish reversal pattern that forms during a downtrend. It's got the name hammer because the market is hammering out a bottom. So when the price is falling, the hammer is a signal that the price is going to rise again. So why is that exactly? Well, the long shadow tells us that the sellers were pushing the price even lower, but the buyers were able to push them all the way back up so it closed close to where it opened. And this means that buyers are starting to take more control. Now, when you see a hammer in a downtrend, it does not mean the market is always going to reverse and that you should place a buy trade right away. And the same goes for a hanging man. You're not always going to place a sell trade when you see a hanging man at the top of an uptrend. What you should always do is wait for the next candle to see if it closes above the price from the previous hammer candle, so you have confirmation the market is headed up. Or with a hanging man, you should wait to see if the next candle is going to close lower and that the market is going to start heading down. Then you can place your sell on the hanging man and you can place your buy on the hammer after that next confirmation candle. So to recognize a hammer in a downtrend, you're going to look for a long shadow that's about 2 or 3 times the length of the body. And then, of course, it's going to have a little or no upper shadow. And then the body of the candle is at the upper end of the trading range, as you can see here. So that's it for those 2. The other 2 single candlestick patterns are called the shooting star and inverted hammer. The inverted hammer and shooting star also look identical to each other. The only difference between them is whether you're in an uptrend or a downtrend, just like with the hanging man and the hammer. Both candlesticks have petite little bodies, long upper shadows, and smaller absent lower shadows. The shooting star is a reversal pattern at the top of an uptrend and looks identical to the inverted hammer. Its shape indicates that the price opened at its low, rallied and started pushing up, but pulled back to the bottom. And what does this mean? Well, it means that buyers attempted to push the price up, but sellers came in and overpowered them. This is a definite sign that there are no buyers left and the sellers are going to take over. The inverted hammer is the opposite. It occurs at the bottom of a downtrend, and it suggests the possibility of a reversal. Its long upper shadow or wick shows that buyers tried to bid the price higher. But then sellers saw what the buyers were doing and attempted to push the price back down. The buyers still managed to close the session near the open. However, since the sellers weren't able to close the price any lower, this is a good indication that everybody who wants to sell has already sold. And if there aren't any more sellers, who's that leave us with? Just the buyers. So that's why after an inverted hammer candlestick, the market could start moving up. Once again, just like the hanging man and hammer, it's good to wait until the confirmation of the next candle that it is in fact reversing and starting to go the opposite direction. So that's it for single candlestick patterns. And now that we've talked about that, in the next section, we're going to talk about dual candlestick patterns. So I'll see you in the next section.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.